There are many areas in which Great Britain still leads the world. One of those in the recent past was in terms of its banking sector, where the bubble burst in 2007 due to a proliferation of excess lending on a personal level and in the housing market. And we were forced via Gordon Brown to bail out the key banks, including Lloyds and Royal Bank of Scotland in particular. The current situation, though, in terms of the charting for these companies is ultra strong. It's not surprising, really, given that with a base rate of 0.5%, they can lend at 3.5% or 4%. It's a massive margin, something that you would not give to even your worst enemy, but the Great British public's happy to pay. And as we also have a new housing bubble, nobody really minds too much either. Going into the situation at Lloyds, massive break to the upside here after a bear trap below 50 during April and May, and we broke back above the February resistance zone at 55, and really we haven't looked back ever since. The situation in terms of what we expect going forward would be something along the lines that I'm drawing at the moment, where we have a rising trend channel from April, floor of the channel nominally at the 50-day moving average level at 74 pence, and the message is that while that area holds, we had a little bear trap here down towards 72, a bear trap below September support. So that is a buy signal as well. While the 50-day moving average zone is held, we're looking at another 10 pence of upside as an end of year target. In fact, with the RSI around 55 at the moment, we have a relatively non-volatile and attractive area to go long. The other thing to notice here also is just the massive distance between the 200-day moving average here at 61 and the current price action. You only see that in the most bullish of situations. Moving on to Royal Bank of Scotland, and here we also have a very strong situation. In fact, I was reminded of the banks as the stock has actually hit the first trend line that I've drawn here in terms of being the price target around £3.85, £3.90. In fact, the overall situation here is even more bullish than this. We could actually see the shares go up to the top of this very wide price channel here over the first part of next year. This is really looking like a very constructive situation. The reason that it could be so constructive, or the reasons, are the golden cross buy signal in August between the 50-day and 200-day moving averages. Before that, we had a rather painful bear trap towards £2.70. And also now we have a breakout via an unfilled gap to the upside here at the beginning of September. This is a bull flag breakout as well. So really multiple buy signals here, and £4.80, £4.70 in Q1 2014 doesn't seem to be too much to ask there. If you want a near-term target, probably for the next sort of month or two, I'd be looking for £4.20 around that area of the 2013 prediction line. Finally, on to Barclays, which is a personal favourite in terms of the way they've handled themselves over recent years. Consolidation after the bigger than expected rights issue, but the shareholders swallowed it. We're seeing the stock starting to tick up. A strong floor there around in the 260s, just below 260 as well, and looking at the RSI support as well to push the shares higher. We seem to have a good risk-reward trade here at the moment, in the sense that we've got a rising trend channel from the beginning of the year, floor of the channel at the 50-day moving average at £2.69. So we've got 9-10 pence of risk here on an end-of-day close basis, and above that 50-day moving average zone, I would be looking for a £3.20 target by the end of this year. So plenty to look forward to there. The current situation on the RSI front is also that we have a modest situation in terms of the oscillator. The RSI is 57, a good place, a good region to buy a stock or a market there. So all primed up to go on Barclays. That's it for me. See you next time.